Okay, let's see. I see my sound is working. We're recording. Do I have video of my main process screen? Anybody? I do. Cool. All right. Good deal. All right. Sorry, I'm starting just a bit slow here this morning, a little late. Got a couple of things going on here that I had to deal with, and I may have to step away for 2 minutes. So just a heads up about that. All right, I'm going to give everyone a chance to get in, and then we will get started. While I'm waiting for those guys, for the rest of the folks to show up, I went back and forth a lot on whether to do a PowerPoint slide deck for this presentation and ultimately decided not to for a couple of reasons, but mostly because I really want you guys to listen and I don't really want to put this into too many chunks like a PowerPoint would do. So keep that in mind along the way, please. All right, looks like we have 25 here. I'm going to mute everybody and we'll get started. Okay, same format as always. This one is going to be both kind of lecture-y and also discussion. So I'll pause at a couple of different spots. But I really want to encourage you to post questions along the way in the chat box, and I will stop to do that as well. But this is kind of a hard subject because it's really individual, but at the same time, there are some broad strokes that everyone should follow. The problem is there's a delicate balance between being individual and following structure. And so I, as I was putting this thing together, I thought about that a lot, and that's kind of where the title came from. And I hope to cover all these things. I'm going to just put the announcement back up here for a second. Building your process creation, adapt, improvise, and overcome. That's kind of a little process in and of itself, which we'll talk about. The importance of art and fun. Some people have trouble understanding that, and I really cannot emphasize strongly enough how important that is. So that's why it got its own little billing. And then delusions. And I think we're going to start with delusions just because it kind of wakes everybody up pretty quickly. So let's start right there with delusions. What do I mean by delusions? Well, I've heard over and over again, and if it's you, I'm not picking on you. There's probably half of you in this group that have said something like this. What I'm referring to is, you've got a full-time job and you've saved up $10,000 or $20,000 in a futures account, or 5 or 50 or whatever the number is. And you want to really learn how to trade so you can quit your job and trade for a living. And you think that your $5,000 or $10,000 or $20,000 or $50,000 account is going to generate, 6-figure income. And that falls into the category of delusions. You really have to understand the math here. I see people posting, for example, in the Top Step group, newbies coming in trying to get funded, or they just got funded. Yeah, my objective is to make 5% a week or 5% a day. I've even seen that one. And I don't want to tell you that there aren't people that are capable of doing that, because there are, and I'm one of them on occasion, but to consistently return even 5% a month against your capital is a really, really, really high return rate. That would be difficult for me to do with all my experience winning and losing. So, there's a couple of you that have said to me, and I'm quoting almost, yeah, I have my $20,000 account and, I'd like to make $5,000 a month. Again, that falls into the category of delusions. That doesn't mean it's not possible. It just means that if you've got 12 months of trading and 3 of them in futures, including, a month in this workshop, you're delusional. You have what are referred to as delusions of grandeur. And I'm not being critical of you. I'm really trying to point out that you just don't have a sense for how the math works. And so part of this is really going to be about that. You know, what does it take to trade for a living and make a reasonable amount of money? If you're not trading a six-figure account, don't even think about it. It's not reasonable to assume you're going to make a six-figure living from an account that's smaller than six figures. I mean, you're literally going to return 100% a year if it's 100 grand in your account and you think you're going to make 100 grand. And again, not saying that's not doable. I've done it, but it's ridiculously hard. Okay, and it's very unusual. Now, you know, with a $150,000 account, and it, let me put a footnote in here. I'm using the amount of leverage and risk that an account that size can take. And I over and over hear this dialogue on the Top Step site and many other places. Well, you know, they're giving you 15 contracts. That's not really $150,000. All right, whatever. I'm using full margins. So my numbers will roughly align with what Top Steps are. So, you know, $150,000 account, quote unquote, could trade as many as 15 contracts. So use that kind of asset or that kind of account size. And that's the kind of numbers it takes to be a six-figure earner. You're not going to do it with a $50,000 account. You're not going to do it with a $50,000 account. Just being consistently profitable is a really, really good success. So, but certainly not at the rate of 5% a week, or, you know, I've heard some crazy numbers. What's realistic? A couple percent a month, up to about 10% a month. You know, if you're pushing more than that, you're either really lucky or you're really good. It's the question, can you consistently do that? You know, I see guys have $10,000 days in a $50,000 combine in Top Step. And yeah, that happens. Everything we refer to in all of our conversations will be over time, consistent performance, not, you know, one-offs, because those are called outliers and they are statistically irrelevant. Okay. Yes, I'm hoping it's good calibration, Darren, because the level of again, I'm just, the only right word here is delusion. The level of delusions among many of you still in this group about, you know, what size account will generate what kind of money. You really need to be listening to this. And that's one of the reasons using other people's money is a really, really critical element of success, unless you have a trust fund or a rich spouse or a really successful career that generates a lot of extra cash that you can afford to lose. If you don't have those things, then you really should be funded by a third party, and your entire focus should be around being consistent enough to generate ongoing profits. That's all that should matter on a one lot or a two lot or whatever, because everything we do in the markets is scalable mathematically. So if you can consistently make money with a two lot, you can make 10 times with a 20 lot. Now, whether you're capable of emotionally managing that is a different question, but the math works that way. It doesn't work that you're going to come in with a $5,000 account and make $10,000 a month. And one of you actually said that to me about eight days ago. And it's really hard for me not to just, you know, say, what are you talking about? I try to be gentle, but, you know, that's just really absurd if you think about it. I mean, the best hedge funds on the planet don't have that kind of returns. Okay. Yeah, looking for a rich spouse with a trust fund. That's a good combination. Except, let me just tell you from some partial personal experience that that's a lot more difficult to live with than you might think, depending on who you are. Okay, Amy, my goal has been to consistently make $100 a day. Yeah, you know, that's a really realistic goal. And what combine size would I put that goal into? Guess what? If you're a $50,000 combine type person, that's the kind of numbers you should be looking at. You know, making 100 to 500 a day would be extraordinarily good. And you shouldn't be taking any more risk than that. So again, you know, this is a really good kind of checkpoint for reality, which is part of what I wanted it to be, you know. So anyway, that's an example of some delusions. We will cover more delusions along the way. Yeah, you know, Raja, that's completely correct. If you trade well, you will make money. And that's why everything you hear from me is about learning to be process-oriented and consistent and controlling your losses. Because if your process works and you have setups that work, the only concern you have is not losing money. Everything else will take care of itself. And I know that sounds really hard to swallow for some of you that are still trying to find your Bubba. But trust me, that is how it works. If you're not feeling that, then you're not there yet. And you just have to be patient and stay on the right path. Yeah, 5K, one contract is seriously pushing it. That is correct. I can understand, you could take my skill set and give me a $10,000 account trading one lots, and there's a good chance that I could blow it up, because you will go through losing streaks. And even if you're an 85% scalper like I am, you'll have bad days, you'll have bad weeks. It's one of the reasons you build a process is to manage your way through that. Okay, I'll just read some of the other comments here, and then I will continue. Yeah, the emotional ability to handle size, Darren. I just went through doing that again a year and a half ago, call it 2 years ago. And one of the things I'm going to do in this session, and I'm glad we got a good turnout, is I'm going to give you a lot of examples from my past. And one of them is every time I create new setups, I go back to one lots, and that's kind of my place to naturally be, even though under certain conditions I'll trade 50. But my point is, nothing works if you can't make it work with a one lot or a two lot. And so, too many of you scale too quickly, you get delusions of grandeur, there's that again, and you blow up your account. And I see it happen over and over in Top Step, in the combines. And that's why that environment is such a good place, a good safe place to learn and to practice and to make mistakes. So anyway, all right, I'm just gonna scan the questions here. Yeah, it does take years to get to being able to emotionally handle size. And like I said, you got to do it over and over again. Yeah, Steve, just to make $50 or $100 a day, you know how you do that? Somebody else who I won't name was trying to make $100 and ended up losing 1,500 recently, and shared that with me. And that's the problem with looking at that. If you don't have a really mechanical structure to your process, is that it's way too easy to get upside down when you're going for those small base hits, unless you really keep in mind that your entire process is to go for base hits. So when you trade and you make small profits, you're happy with it. Then you see a few big losses, you freeze. Yeah, we'll talk more about that. That's a very, very common problem, Jerry. And I'm going to talk a lot about elements of that in this session and several others, but particularly as we get going in this one. You know what, that is true, Lee. There's a very interesting, I think it was Darren that posted once in the Top Step group about how, the vast majority of people there really aren't there to get funded, or at least, deeply they aren't. And what they're doing is it's really entertainment for them, and Top Step benefits from that. But the beauty of their model is their risk model, which many people complain about. There's 2 steps, and the scaling's too slow, and the weekly loss limits are too tight. And you know what? The whole point is to get you so that you can handle that, because then you could pretty much handle anything. And so. Yeah, that's very true. Everything everyone is saying is true, and it's interesting. All of the different viewpoints you guys are expressing are the whole idea here is to keep perspective on this stuff. So, all right, now let's continue. Imagine your account is 100. Yeah, you know what I do? Again, I'm going to be lots of anecdotes about my own, but what I've done for most of my adult trading life, since I had either my money or somebody else's of any substance to trade, has always been pick a barometer. A good one for me is 100 grand. So if you say, okay, I've got a 100 grand account and my objective is to make a living doing this. So basically the way to manage that is to remove whatever profits you have above and beyond 100 grand every month. You literally write yourself a paycheck. And that's one of the ways to make this more mechanical for yourself. The trouble is when you're further down the equity curve and don't have a lot of money to work with, you're constantly in a struggle between paying yourself and growing your capital. And again, other people's money solves that problem if you just, man up or woman up and adopt the discipline it takes to get through a process like Top Steps or whoever you choose to work with. I've looked at some of the others, by the way, you know, One Up and some of these guys that some of you are using that, oh, it's easier than Top Step. You know what, I not really. Yeah, they have one step, but they have ambiguity, and you need to be careful of this. Everybody who's looking at someone besides Top Step. Top Step used to use the same ambiguity. For example, there's in One Up, I think it is, there's a parameter about you have to trade consistently, but there's no definition of that. And what they do is they use a committee to look at your record and to make that call. Top Step used to do it that way too, and they got criticized for it, so they made it just, here's the rules, you survive and you will be funded, no questions asked. Be careful of those ones, those other guys, because sometimes there are questions asked because they have that loose parameter where they can be discretionary over whether you've truly accomplished what they say you have to or not. So be really mindful of that, just as an aside. I'm bringing that one up. Okay, let's get back to the agenda here. First thing I want to mention with respect to process, I'm going to stick mine back up here for a second. Just breaking this down to bare bones, how do you get to something that works for you? And that's the first hint right there. To even endeavor into doing any kind of a process for anything where you're involved, you have to remember that the word you and your keeps popping up in there. These are incredibly individual. Now, having said that, one of the problems, and this is a Dunning-Kruger kind of a problem if you're familiar with that, you don't know enough about building a process to know where you're building a process properly and where you're building a process poorly if you don't have skills in systems design and process building. And that is a huge issue with getting through this to the point where you can have an executable daily one sheet like this that just has, and again, in mine, I will explain more, but there are so much depth here that you don't see because you're not me and you don't know why. For example, this one, you know, ace, king, enter this now, question mark. What does that mean to Jeff? You have to build something like this that has meaning for you in that same sense. So really important as we go through this to be really, really self-critical about your own stuff. I'm just giving you mine as an example. Yours is got to be, by definition, different. And the word you is going to come up constantly because of that. So your situation, your skill set, your limitations personally, physically, mine. I've got chronic pain from all kinds of busting up my body. You may have a noisy 2-month-old and you never sleep, or you may, whatever, you rescue Dalmatians and there's 18 of them in your backyard barking all the time. Whatever impacts your world has to be something you consider. If you have a full-time job and you're going to be doing this in the evening or some overnight hours, okay, what are the pieces of that? If you have a spouse or a life partner, wife, husband, whatever, I strongly recommend that you somehow engage them in the process of creating your process. Because if they don't understand what it is you're trying to do, it's going to be a constant source of frustration for you. I'm not saying they're going to necessarily understand what it is you're doing, but at least they'll have a sense that it's not quite as simple as, you know, pulling the lever in a slot machine, which they might be thinking it is. You know, we've had this conversation before. All right, so that's a really, really important point. This is about you. I'm going to explain it from the perspective of mine, but adapt that. Okay. Oh, and yes, there are a bunch of things that Amy's comment reminded me. You know, you hear my, like, I have 3 rules. That's not part of my process. I used to try to integrate that in, like my don't lose money, good trades tend to work right away, always take profits. I used to break these things into my process and my rules and my filters and my guidelines. You know, I actually had names for all the different categories, and, you know, I'm one of those kind of guys, organized to death. And I finally realized that was really more of a mantra. And so one thing that's not on here that I do have, and there's a few of them. I've shared this a few times, like that, you know, fun, balanced, loose mech thing that's on my desk. It's not in my process. Well, that three rules thing is another example. And also one I'm doing right now, which I'm going to share with you a little later, but I'm working on a preamble for the overnight versus the regular trading hours, because I did a little study on my errors overnight, and over 90% of them occur because I'm framing the setup overnight in a context of how I would have framed it during the day. That's really the only place I make a serious mistake trading overnight. So I'll show you in process thinking how I'm going to go about attacking that. Okay, so your skill set has to be about you. A few examples. And you know, if you're new, you haven't heard this, it's in the other videos. You probably will remember it along the way. But again, I'm going to share a lot of stuff that's personal because that's part of making this work. And I've mentioned before, pain management. I've broken my back a bunch of times. I've broken my neck. I've made every major bone. A couple of different ways: track and field, racing motocross. I was kind of into extreme stuff when I was younger, and racing cars. So, so one of the things I realized, and this might really ring true for a lot of you that are younger and still have a very, you know, master of the universe kind of mentality, which I did when I was 30 or 40 even, and I kind of seasoned into an, you know, old fart sensei mentality as I've gotten older, which is easier to do, but you have to earn that. So, so one of the things I used to do, and this is, again, I'm going to give you guys lots of anecdotes. I used to ignore this. I used to think that pain was just in my head, and, you know, I just had to figure out ways to ignore it while I was working. And that was really stupid. That doesn't, that doesn't work, and it didn't. But it took me a long time to figure that out. And so the moral of that particular anecdote is you have to be ruthlessly self-critical. I want every one of you to write that down. Ruthlessly self-critical. If you are not the kind of individual that can look at yourself and really know what you're about, every bias, every prejudice, everything, then one of your missions in developing a good process is going to be to rip your core of yourself apart and learn what you're made of. And that's hard. That takes a lot of work. But I don't want to say I guarantee you, but I guess I would use something a little less aggressive. Maybe I assure you that if you don't do that, it will cause you to have failures. Not necessarily that you will fail completely, but it will be much more difficult if you are not ruthlessly self-critical. I hope that translates for people that aren't English as a first language. But what I mean by that, ruthlessly self-critical, is every single thing you do, your interpretation of it has to be, okay, what errors did I make? What is wrong with my interpretation? How can I improve my process performance? Notice how, again, you, this is all about you. The market is out there and will give you profits if you approach it from a structured point of view. If you approach it from, I can just dip in here after 8 months of learning about futures and make $10,000 a month from my $5,000 account, you're dreaming, you're delusional, and the market will just rape you and rip you apart. And then you'll go over to Top Step and you'll start paying for the combines, and you'll fail the first step 5 times in a row or 10 times in a row. Is any of this resonating with anybody? Okay, you can't go about it that way. Step 1, you've got to understand yourself. Step 2, you have to figure out a way to build a structure that keeps you from doing the things that sabotage you. Okay, play that one again. You have to build a structure that keeps you from doing the things that sabotage you. I've seen in the process, in the Slack, and there's a bunch of it in all the different channels, people talking about failures, and I did this and that, and I'm so stupid, and I'm not going to do that again, and here's what I'm going to try. That's the right kind of thinking. You have to do that. And guess what? It's uncomfortable to be self-critical. But if you don't get good at it, you will fail at trading. And by the way, I'm not going to name who I'm talking about, but I had a conversation this week with somebody who's been a really successful stock trader for 15 years. Make sure you get all the detail of what I'm about to say. Okay, successful stock trader for 15 years. the last 15 years, right? And really thinks they have a handle on their understanding of the markets because of that experience for the last 15 years. I'm going to stop right there, and I'm going to throw this out to the crowd. Please, in the text box there, just that bit of information I gave you, what is wrong with this individual's experience? I mean, 15 years of profitably trading stocks, that sounds like, you know, they got to know what they're doing. Anyone want to take a crack at what I'm suggesting here? It's really, really important. Every market is different. You're on the right track. Pride is a big chunk of it. It's ego. It's, oh, David, what did you say? It's been a big bull, basically. Hello. Yeah. Summer, you nailed it. Different assets, also correct. Yes, all of you got the right points out of that. This person has basically been profitable in the most the biggest bull market uptrend in history, that literally all you had to do was buy the dips, and you see those guys all over Twitter, oh, buy the dip. And they consider that to be experience. Well, guess what? Markets have cycles. And so rule number one here, guys, what's a typical market cycle? And it used to be 5 to 8 years, but we have not had one now since the quote unquote crash of '08, you know, the Great Recession. That's 10 years ago already. So those of you that have been around for a while, 10 years without a cycle is a big one. But if you've only traded for 15 years, you've never been through a cycle. So don't tell me, and again, I'm not picking at the person that said this to me, but don't tell me that you're a successful stock trader if you've been profitable for the last 15 years. You know what? Who hasn't? All you had to do was get long. So wake up and understand how delusional you are. Again, you know, I'm not trying to be critical of you guys. In saying that, I'm trying to make you understand the environment you're in. If you don't have a couple of market cycles of experience in multiple different assets, then don't pretend to yourself that you really have a handle on how the market works. You have some experience, great. Okay, now the world has changed, all right? We are not gonna have another uptrend that's gonna continue for another 3,000 S&P points. It's just not gonna happen. So what you need to do is you need to really just discard all that, chalk it up to experience and say, okay, what do I need to do to be consistently profitable going forward? And that's where this comes in. Okay, so it's very, very individual. You have to be really good at critical thinking about yourself. Now, again, I'm going to use examples of me, but if there's certain things that you're not good at, get help or take a class or run it by somebody who is good at that particular thing. I happen to be really good at systems design, and I'm using that term very, very generally, but I can code and I can do all the technical stuff that's deeper under the covers. But the thing that is really my skill, because I'm a marketing and sales guy, basically training was my world. I was the guy that could kind of be the person who could talk to the really crazy NASA technical guys, but also make it explainable to the rest of the world. And that ability is the ability to design systems and to create systems. So for me, this was a pretty straightforward exercise. And again, I'll share with you kind of the things I did, but if that's not your forte, then again, figure out how to make it work for you. So let me go back a little bit. I think every one of you should try to divide whatever process you do end up with into some sort of structure like this. And you can ignore this picture over here for now. That's really not part of what we're talking about. So number one, I think it's really good to have 3 steps. And let me explain really quickly how I got to that. There's another 3-step thing that you'll see a lot of times when you see different kinds of training. Axia, a couple of the Axia guys do this. They break the market up into what I call context now, but you may see that referred to as market structure. And for example, the Axia guys will say that there's three things that are important during the day. Okay, they will say number one, the technical picture. This is like Brannigan will tell you this. The technical picture, by that he means the context, as we've done it in my process where, I go back here and I look at the Renkos and, I've shared this all with you before, but I'll just drag it out just to refresh your memory. We have a trend, we're consolidating, that kind of thing. That's the technical picture. So you'll see that pretty frequently out in the world of systems because it's a good thing it's context. What I decided to do was to break technical picture down into two different parts. So that's where mine varies a little bit from some of the things you'll see out there. And again, I'm using this as a means to explain how I got to my thinking. I realized that was really more important for me was context, given previous days and the technical structure and everything else. But this kept coming up for me, that order flow overrides this. And so I decided to make this kind of all together, that yeah, the context of the previous days really does matter. It used to matter a lot more 10 years ago. And this is answering a lot of questions that you guys have asked me over and over again. Like, well, should I use, the previous day open and the previous day high and the previous day low? And how do I do that? And a lot of people use that as an edge. That goes back to about 10 years ago when I think that was a better edge. I think the automated trading world, algorithms, HFTs, all that stuff has made those things easy to game, those levels that everyone sells. And so my personal process and my personal take on this, and you've heard this in the setup instructional videos, I believe that you still want to do that, but you really got to do it with a grain of salt, because the danger in looking at that is it gives you a bias that, oh, well, there was let's go back and look at the ranges for the NQ, and I always make this funny voice when I do that because, that's the Furu voice, like this is science, and it cracks me up. It's not science. That's such bullshit, but they talk like that, well, we're at the bottom of the opening 5 low, which means that, we will have to bounce up here and retest the, it doesn't work like that. These are just potential places of interest. Again, we've talked about this. Inflection points just mean pay attention. They don't have any bias. And if just because we've been coming down and we get down here, you automatically assume that this is support and we're going to bounce, that's a real dangerous thought. Now, what's the right thought there is, okay, the structure here says that everybody's going to think that, so it's worth watching because that could be a great trade, but you can't have that bias. So that's the thinking behind why I broke this up the way I did. I want to understand the context of the technical picture, what happened overnight, what's the profile structure look like at the moment. But extreme boundary prices, I'm going to explain each one of these in detail, but that's another way to do that, again, because I'm not saying, oh, well, there's a, high or a low that's going to be support or resistance or a pivot or any of that, or fib, any of that nonsense. I'm just saying, okay, well, right now we're at 82.83. If it got down here to 82.40, that's a boundary price I would really like. Why? Just because I've got no risk whatsoever in getting long down there. Not that I necessarily think it's support or it will bounce. I don't want to use any of those words because they will suggest bias. Support means I have a bias to be long. No, that's not the right answer. The right answer is this is an interesting level. It's an inflection point. I want to come in there and I want to nibble on that idea. And if it proves right, good trades work right away. All trades are scalps until they prove otherwise. An entry here would have proved fairly quickly it was not a scalp. Because it would have gone your way. You could have been adding to the trade, and then they would have thrown it back down. But again, it held. So that's what I'm talking about here. I don't want to get into too much chart mechanics, but that's the point I'm making. So let's go back and review that. It became really, really important for me to make this distinction, and it may or may not be part of yours, but I decided that context really wasn't about the technical picture. It was about understanding the difference, and listen really closely to this next sentence, the difference between the technical picture as I would understand it looking at previous days, and then intraday what's actually happening given that technical picture. Okay, so that's why order flow overrides everything gets so much emphasis in my process, because my training as a technical trader and my understanding of technical analysis kept misleading me. And you've heard me use that term over and over again. I kept thinking that support meant something until I realized that, yeah, until somebody decides to sell it, it means a lot. So the words are just too bias creating. Do not use support because it creates a bias in your head that you're going to go up. But the reality is that inflection point could create a really wicked short. You know, like I just showed you that retest example right there. So if your whole mind in this was, you know, I'm long and I'm riding the long, and then this happened right here, again, that's why you have to stay in the moment and you have to stay in the day. Okay. So this was part of a point I was making overall, which is it has to be about you, has to be about your situation, has to be about your skill set. I'm a really good systems designer, as I said. So this is the kind of stuff that is kind of like my passion, is how can I break this up into a mental picture that just over and over again I can review and it always looks the same. So that's how I got to this. Okay. Now, I said that within the context of telling you guys that you should have 3 basic categories, or at least an approach like this. You know, you can use 5 or whatever, but and now I'm just going to go through how I got to this, and then we'll stop and take some questions and fill in some of the blanks. Okay, so why is step 1 humble? Well, this is a great one. I used a lot of old, I've shown you this before, where, oh, by the way, this right here is the stuff I was talking about from like Axia, 3 pillars, that they do that in their training a lot. And many people do, because it's a great way to get people to understand markets. The technical picture, the auction structure intraday, and then the order flow. So you're kind of going to the most granular, moving up to the kind of the totality of the day's granularity, if that makes any sense, and then zooming out to other days. So I really liked that, but I found it lent too much bias to this. And this whole thing here was a really interesting way, like, you know, pain, yes or no. I mean, I literally had, and it would calculate this stuff up, and it would give me the odds of trades working or not working, and how much I lost if it didn't work, and going a counter trend is CT here. So time slicing the order flow transition. So that's all. I could do a whole workshop on that. So anyway, my point is to get down to this level of specificity for where, you know, why do I just have these items here and not other items, and why those items? That was part of me going through and looking at literally every decision I made and how I made it and what chart element created that decision, et cetera, et cetera. If you're interested, I had a great wicked Twitter battle last night with a bunch of people, and it was really fun. It was about this, and I posted my video up there again, and a couple of people watched it and they commented. And one of the things that I said in that was, I talked a little bit about this process, and you might want to go look at that Twitter chat, because it's interesting how you will see people that I will say, okay, what's your process? And this was actually a comment last night. And the guy's response was, I look at the 20 MA, and I said, wait, stop. I look at that. What are you looking for? He couldn't answer the question. It was, you know, he thought he was being a discretionary trader by saying, well, when the 20 MA starts to curve, that's my edge. I mean, and this is a classic example of just totally having no idea what you're fucking talking about. This guy has 25,000 followers that are believing this bullshit, guys. So it's really important, again, to be totally self-critical. And if any one of you ever says to me or to any of the others in the group that, well, you know, my setup is I look at the 20 MA, or, you know, I watch multiple time frames. There's another one. For what? What exactly are you watching it for? That's the question. You know, I don't want to know how much of a genius you are for telling me all of the charts you have up and that you have 11 monitors. None of that means anything. What matters is, how do you make money doing that? You know, that's really the bottom line, which is another Docism, Jeffism, and it's in my trading binder, which I haven't even told you guys about. It's a whole nother thing. I have something called the trading binder. And the first page of the trading binder is we are here for one purpose. I have one purpose in the financial markets. Does anybody want to take a guess what that is? This is in my personal trading binder. This is where everything I know is stored. I have one objective here. Does anybody know what it is? Has anybody seen me quote this before? I have said it, but I haven't said it a lot. Have fun making money. That's close. Okay, those are all rules, like the, rule number 1, make money, rule number 2. Yeah, Greg, you are really close, okay? And I've said this a few times. Here's what it is, okay? There is literally an entire page in a plastic holder. It's the first page of my trading binder. It says, you have only one objective, to remove money from the market consistently. Nothing else matters, okay? That's all that matters, consistently removing money. That's why we're here. We're not here to be right. We're not here to have more followers on Twitter. We're here to extract money. So the purpose of your process is to do that. And that means it has to really be critical of you, because if you're not extracting money, guess whose fault it is? It's not the markets, it's not the HFTs, it's not the algos, it's not the big boys, it's not let's see, what are some of the other ones? Yeah, you know, all that. It's not all that crap, okay? None of that matters. That's all bullshit. The only reason that you're not pulling money out of the market is because you're making mistakes. Now, some people make very large mistakes that will never work, and they have to get on something that works to start with, and that's that process of finding an edge. But I think in this workshop, at least, if any of you are still struggling to find an edge, then, go back and watch some of the videos, because any of these setups should give you enough of an edge to solve that question, at least to get started. I mean, if you do nothing but trade the open 5, that's a decent edge. So I'll leave you right there with that. If you're stuck on your edge, start with the open 5 and trading for 1 hour a day in the morning with a 1 lot and build your confidence. So yes, we are here to consistently pull money. Nothing else matters. In addition to that, not only are we here to do that, but nothing matters. Your ego doesn't matter. Your opinion doesn't matter. Your nothing, literally. So, one of the things I love to do, I love to pick on Furus, but if you just, on any given Sunday, just whip up, all the chat about the futures and whatnot, and, it's mind-boggling. The crap, look at this guy, market direction, strength and weakness. We do the heavy lifting. Okay, whatever. Anyway, I mean, it's just they don't have a very good self-awareness sense, because they don't realize how silly they sound. Well, some of them actually are doing it deliberately. Those guys do, but most of them don't. They think they're actually experts. That's the interesting point. So let's go back to process, and let's take that now, and let's look at some concrete, real live examples of how I got here and why. So, number 1. Why is step 1 humble? Why is that the first thing I tell myself? Well, it's really simple. It's really, really simple. Once you get good at executing, the only enemy you have is, God, this keeps coming up. You, yourself. The enemy that you have is not the market, it's not the HST, it's you. So guess what? The minute your ego gets too big, you will have a massive loser. And my great story for that, I've told some of you guys, I've shared it in some of the webinars. I had been really pretty successful in my teens with my quote unquote trading. A short recap, I had $1,500. I bought some tech stocks at the time, quote unquote tech stocks. One was called ComSat, which was kind of one of the early communication satellite companies. That's what ComSat stood for. They got acquired by MCI, and so I kind of made a bunch of money, and I thought I was really smart, and I started trading options on acquisitions candidates. This was like when I was about 16 and 17, and I made some money doing that, because again, you just have to get lucky a couple times, and it works. So by the time I got to UCLA, I was doing that pretty consistently, and I started doing it with OEX options, which were the mid-cap index. That was the most liquid way to trade before futures really got, before futures became tradable by individuals. You could trade on the floor in the 80s, but it was very hard to trade futures remotely. You had to have a pretty good relationship with somebody that was at the exchange, and it just didn't work. So what a lot of people did that were speculators is they traded the OEX, which was a very liquid group of options on the mid caps, and it was a way of speculating on the S&P too, more or less. So that's what I did. And one day I just thought I was a genius, and I thought the setup I had couldn't lose money. And then like an hour later, it was down 150 grand. And that was a good chunk of my capital at that point. And so I realized it then, but it took me a while, that was a long time ago, to build it into a process, because I realized that, if I went back and looked at my journals, and some of you this may resonate with as well, that whenever I would say stuff in the journals about, oh, I had such a good day, I'm really excited this worked, inevitably within a day or two, I would have a massive failure, just because, my ego got big and I got stupid and I'd scale too much or whatever. So yeah, you can't carry forward anything, Darren. That's absolutely correct. So that became, step one, humble. And when I was building this particular iteration of my process, I had always had this little Van Tharp thing in here, this series of steps. And it for me, again, resonated, because the other way that I made errors was by falling out of my own process. In other words, I would get a good idea, I'd stalk, I'd take action, and then right here is where I would go awry. I would take profits, and then I'd do the same trade over again without thinking whether it was a low risk idea again. In other words, I wasn't cycling through a process. I was just thinking, well, that worked, I'm going to try that again. Classic human greed behavior, and recency bias. And again, I didn't understand what those things were early in my trading, and I do now, and I have for a while. So when I saw this it was in Stocks and Commodities magazine, like in the late 70s, and I clipped it at some point. It's been involved. It's been in various forms of paper and scanned paper since then. So. Anyway, and then this thing I just glued on top of it, the reset, because it just really was a way to remind myself how important that was to do. And also one other comment about this is, it kind of is implied for me, daily debriefing really is journaling. And a lot of times that occurs in the monitoring process, not just at the end of the day or periodically. So, I don't adhere to this rigidly. It's just a guideline to, okay, are you being an idiot? Is your ego big today? Get that out of your system, analyze yourself, make sure you got your shit together, mental rehearsal, preamble. I'm going to come back to that, because that's something I just started working on again for the overnights. And then, this is all pretty straightforward. Low risk idea, that's a setup, stock, it happens, it's an edge, it's a ledge, it's momentum, whatever. Jump in, monitor the trade, take profits. This is all pretty standard trader stuff that we all get. So anyway, so that's how this became where I started. And the most important thing to me was that little walk down memory lane. And I still, no matter what I'm doing over here, I never change this, because it's just always worked for me. It's a really good way to check myself. Okay, so that's how step one came along. Number two, this one, used to be step two. My competent used to be step two. And then I realized that was, again, a prerequisite. And I'm using that word very deliberately. These two here are prerequisites for me doing anything. I'll come over and look at the context on days I'm not going to trade, just for practice. But if I fail my competency exam here, I don't trade. And there's a really good reason for that. And again, listen carefully. Because this is the difference between, I passed a combine and I can't consistently be profitable, and becoming a consistently profitable trader. I'm telling you it right now. Because if you have the skills to pass the combine, you're capable of trading. What you're not capable of doing is the thing I said a minute ago, of keeping your focus entirely on consistently removing money. Your ego's getting involved, or your emotions, or whatever. Things are happening. So the way that I stop that from impacting me is right here. I do a competency checklist, and that's why this one's numbered, because I literally do that, okay? Number one, am I following my process? Well, if I got here, I'm probably okay on that, but there are times where I'll just sit down at my computer, and this thing is always the first thing I open up. And that's just there to remind me that I really need to do that. If I don't go through step two, I'm going to screw up step three. So that's what that's about, okay? It's about just really focusing me in on it, You know, that's rule number one of competency is, are you following your process? If you're not, then the rest doesn't really matter because you're not competent. And this can, competency for me, for example, I noticed on a couple of the samples that you guys put up, you know, how much sleep you got and whatnot. These things in here used to be part of this checklist. And then I realized, again, this is about me, but it may resonate for you. I realized that all of these things were critical or I wasn't competent. So rather than making them checklists, like, did I get enough sleep? Did I get enough exercise? I call these my pillars. That's what these things are. And this is, I just refuse to do anything if these things aren't happening, because the rest of my life doesn't work if these things aren't happening. So if any of the pillars aren't work, like I didn't sleep well, I might still trade as long as I can stay in my process. But I really understand how critical that is. So sleep, exercise, simplicity, you know, I'm a minimalist. The right food can make a huge difference. You know, having some protein before you trade is much better than having, you know, a big giant Pop-Tart or, you know, pancakes with syrup. You know, you need to have the food that helps you think and focus. Having the right expectations, you know, it's a long game. A bad day is not the end of the world. You have to learn to forgive yourself. Yeah, I will comment on that in a second, David, but yes, I do. Solitude and thought time has become more and more important for me as I've gotten older. I realize that, you know, I'm kind of an extrovert. So, you know, I have been a trainer. You know, I spoke at the first Macworld introducing our Mac product in 1983, and there was like 15,000 people there, and I was 21. I've never been so scared in my life. And I wish when before I did that I understood stuff like meditation. You know, there's a conversation going on in Slack about meditation this morning, and I do it all the time, and that's why that's there. I mean, it's critical to me that rather than listening to what other people think, which really doesn't matter, you know, if smart people think certain things, I listen because I respect their opinions, but it's really about what you think, you know, and you really have to get used to trusting your own judgment. And the only way to do that is to spend a lot of time alone thinking about what you think about, whatever that might be. So I can't emphasize that one enough. Meditation, you know, Shinkaru, that's Japanese forest breathing, you know, literally walking in the forest can be really good for thinking. So anyway, slow and savor. I'm a hyper guy, so that just keeps me from totally burning out all the time. Particularly when I'm eating, I tend to inhale food and have fun. You know, you got to do that with everything. So I had those in here and I took them out because they're really all go together as the pillars of successful life, not so much trading. And I have like a little printout of that in my wallet. You know, every time I get money out, I see it and stuff like that. So again, it's about you, but you know, you may find this resonates. So competency, you know, that was kind of like the prerequisites of competency. Process. For me, pain is a huge distraction. And also recently I take care of, or I lived with my 87-year-old mom who has Alzheimer's, and I was taking care of her. That's why I moved back here from Colorado. And that was an incredible distraction. So hang on a second. There's a separate conversation going on there with Anton. Okay. So those two things were really my biggest issues, were pain and distractions outside that kept me from being focused. So that's why I did that. But again, make it about you. Number 3, am I thinking about risk management? You guys have heard me over and over and over and over and over and over say, once I'm in a trade, the only thing I think about is risk management. Now, if I'm not doing that, I'm not in my process and I'm not competent to trade. If I'm in a trade thinking, well, gosh, if this goes all the way up to yesterday's low, I'm going to make $1,200. That's a penalty box. Take yourself out of the market and go do something else. So risk management has to be your focus. You never enter a trade to make money. You enter a trade to not lose money. If the trade works, you'll make money. That's a given. That's why you're in it. So don't think that way. Think the other way around. You can't lose money because losing money over time will wipe you out. So you have to focus on not losing. If you truly have an edge, you'll make money more than you lose, and that'll take care of itself. Remember that. Risk management. Number 4, and I'm going to stop and pause for questions and comments after these 5 items. Number 4, trader, not lizard brain. This is after 46 years, I still do this. Unless you're the most mechanical person on the planet, you will too. So build this in somewhere. When you're doing it a lot and you're doing it well, every now and then your little lizard brain will go on and, translating what that means. The lizard brain is kind of like your instinctual gut response. And when you get really good as a trader, your gut responses are pretty good. But there's times when you will still be stupid. You'll still say, oh my God, it just dropped 200 points in the S&P. I'm going to get long here because it's got to go back up. Okay, that's a lizard brain story. I do that all the time. No, that's the wrong way to do it. Now, the right way to do that same thing is to say, okay, we just had a classic shock to price discovery. Everyone is on the sidelines trying to figure out, is this a good place to nibble? Yeah, I could fade that move because I can define risk, number 3. And if it starts to go against me, it's really obvious. The 3 rules: good trades work right away, take profits, and don't lose money. So those extremes tend to be really good places to trade. Just make sure you're using your trader brain when you do it and not your lizard brain thinking about how rich you're going to get, because you won't. Okay. And then the wrong feel rules. This was the summation of, some people have, if I have 3 losers in a row, I stop trading for the day, or 3 bad days in a row, blah, blah, blah. I used to do that, and I recommend that. So my rules were the following: 3 losing trades in a row, I'm done for the day. 2 losing days in a row, I'm done for the week. Okay? That was my rules as a rookie, and I suggest you adopt them, or something that works like that for you. It's a way of not getting buried. I know at least 5 of you have shared with the group or with me examples of, you were doing fine in your funded account, and then you had a bad day, and you lost your confidence, you had another bad day, and then you were closing in on the weekly loss limit, and it all went to hell. Yep. That's wrong field rules. What you should have done when you had that first losing day, the next day wasn't going well, is get out and take the week off. That's what you have to do. Okay? Yeah, my mission, I recommend you have a mission and whatnot, but I'm not going to get into that here just because, that's mine. And basically, I want to be able to do both. I want to still do, HR is high reward intraday swings, where you put on a 1 lot and make $2,000 in oil, that kind of thing. And it happens. The problem is switching back and forth mentally, and we'll talk about that more later on. But it's very hard to have a scalping mentality when you're doing intraday swings. But yeah, I'm trying to get to the point. That's kind of my last thing, my, what's the right word? My magnum opus, if those of you who know Latin, my masterpiece. I want to be able to build a process that allows me to just sit down and scout no matter what, which I'm pretty much able to do now and have been for a while, and then still nail those swings. And, then I'm going to do a $10,000 a day challenge, which I'm going to probably do in December or January. I may do it publicly, I may not, but it's always been a goal of mine to try to have like a $2 million a year, just, based on consistency, not on any home runs. And this is a really good environment to do that. So I may publicly do a, trading 10 lots for $10,000 a day kind of challenge for myself. I've been thinking about that for a while. I have yet to put together the pieces of it. But anyway, that's what that's about. So, all right. So that's the competency, and that's those 5 elements. That's why they're numbered. Yet notice how every single thing on here has a very, very specific reason. Okay? Like down to why these have numbers and these don't. Okay, there is literally, if you ask me, Jeff, why is risk management number 3? Why is MGMT capitalized? And why does it come after focus? I can answer all 3 of those questions. I'm not gonna right now because it's boring, but you get the point. There's a ton of thinking behind this. There's thinking every day behind it, which I'll come back to in a minute. And you have to build yourself this. I don't know a good trader who doesn't have a form of this one way or another. Maybe it's not one page. Maybe it's an Excel spreadsheet. Maybe it's a process they do on a tablet, while they're trading, whatever. But I do not know a skilled professional trader with any kind of consistent record that does not do something like this. So, okay, let's see. Yeah, we're going to come back to that last part. I'm just looking at my notes here. Give me 1 second. Okay, that's an example for later. All right, let's look at the questions and comments. Yep, getting out of your own way, critical. And you know what, Colin? And I saw comments about meditation and whatnot. that you guys were the conversation you guys were having this morning. Getting out of your own way and also understanding that your own way is your Bubba. And that's a really difficult balance. It's the reason that I have 2 undergraduate degrees. One is in international economics and finance, and the other is in East Asian philosophy and religion, because that's my balance. That's my way of understanding myself, but still being in this crazy capitalist game of trading. I hate capitalism. I think capitalism is one of the worst things that's ever happened to society. I'm talking about unregulated capitalism. But I'm a capitalist. So, that's part of my whole minimalist thing. I think, you have to regulate capitalism because it destroys itself if you don't. It's too many examples of that historically. So, too much power, absolute power corrupts absolutely. So no, corporations are not people. However, on Wall Street, I'm unusual in that I don't have those, those right-hand views. But the point is, it's about you. You've got to make this fit you. And by the way, if you have any delusions of your own, that are personal, that impact your ability to be self-critical and your ability to do this kind of thing. And I will give you guys a direct example of that. A former student, I've mentioned this before, just a really, really religious woman. She is dyed-in-the-wool in Christianity, evangelical Christianity. And I'm telling you right now, if you have a very rigid dogma belief of whatever, of religion or culturally or anything like that, if you cannot put it aside to trade, you will not succeed. God will not make you a successful trader. Yes, I've actually had this conversation with this lady. She thinks that if she prays enough, she'll become a successful trader. It doesn't work like that. You can be the most religious believer. That's fine. I'm not criticizing your faith. But what I will tell you is it has no place whatsoever in this world. Leave it where it belongs, with your faith. Okay? Critical point. If you're not hearing me or if you disagree, take it up with me personally, but trust me, you are making a mistake if you think yes. If you think God's going to make your trading, that you can pray for your trading account to double next year, you're delusional, okay? That's what you are. You really are. All right, enough about that. Just so you know where I'm coming from. Okay. I'm reading comments and then, yeah, you know what? There's something else I'll share with you guys about, Amy made a comment up here and I'm going to go through all the comments about making every day green, small or large. And I have another template here that I actually used for somebody very recently that was doing a combine. And this is it right here. And I'll share it with you if you want it. There's a couple things that are incorrect on here. It says, oh, actually, no, wait, I fixed it. Yeah. What this person was trying to do was learn some consistency. So I suggested they have, daily goals and put the daily totals in these boxes with weekly averages. And, to get through the combine, you have certain step 1 objectives and step 2 objectives and scaling objectives. And I suggested that they use lower limits for the losses. Anyway, this is a way of kind of doing what Amy's talking about. It's really good to track your daily progress as long as you just don't, get beat up by it. If you have a couple of bad days, so what? But anyway, if anyone wants this, let me know. I'll post it in the Slack. Just ask me for it there. Okay, so let's see. And you'll need to update it. Obviously, I think it has October on there. This was something we actually changed that a few times. We were doing this from about August, this person and I. And they did get funded, and they're doing okay. But that was a huge piece, being having a tracking system, and that was also how she was accountable to me. We shared that spreadsheet on a Google Drive, and we didn't have to talk every minute. I would just look at it and say, okay, I'd see that there was a -50 day, and I think, okay, she probably didn't just start out and make -50 and call it a day. So I'd ask, that sounds like the kind of day you had a loser and you fought back. And yeah, that's what happened. Cool. Let me see the trades. Yeah, that's how that's useful. Okay. So let's see. Let me go back. Starting every day with trading setups and meditation. Yes. Okay. So David's question goes back to my trading binder, which again, I haven't shared with you guys. And you know what? I don't know if I can do. Can I join this webinar on my phone and then use the camera on my phone? I wonder. Let's see. I'll try that some other time. Anyway, so there's a bunch of stuff in here. Even some of you are in here. Darren's thing about scalping versus trend trading, I actually printed and put in here because I wanted to save it. Anyway, so what I do, yes, the first thing I do when I roll out of bed is I look at this. And there's times when I don't feel well because of my pain or I didn't sleep or whatever, but I'm still comfortable enough with the open 5 that I'll trade the open 5 without even having coffee, which for me is important. And so to answer, I'm answering your question. I'm doing it in a bit of a roundabout way, but and then as I take the breaks and stuff that you see in this calendar I use, you know, wherever you see take a deep breath, that's code. That actually means I meditate. So if it says take a deep breath here, I'm very good at meditation. I've done it my whole life. So, you know, at 6:35, I'll take a deep breath and I'll tune out for 90 seconds and really clear my head. But, you know, the level of clarity I get from that is what it used to take me meditating for 2 or 3 hours. So yes, I do that, and I do it over and over. And right now what I'm working on is what I call a preamble, which is right before you do a trade. It's just something you repeat to yourself. And I'm going to come back to that. It's part of the answer to your question, though, David, about meditating. Okay. Yeah, having, I'm answering or commenting on Raja's question about having rules hard coded. That's not a bad idea. I used to do that. And that's, you know, when I show you guys this process, this was linked to Excel and linked to my trading platform and linked through Rhythmic. And that allowed me, yeah, on certain errors or numbers of losers, it would automatically see circuit break right here. That will automatically shut my platform down. So if I hit this loss 2 minus 850, if that was yes, it flagged red and it sent a signal out to Rhythmic. And you can do this with Rhythmic Trader Pro. It has the ability to input parameters like that, which is really cool. If you really want to be mechanical, I suggest you take a look at that. Rhythmic Trader Pro is the risk management software that TopStep uses. Also, if you just have a Rhythmic account, it's free. I use it in addition to Ninja because it allows you to do stuff like that between you and the broker that's actually executing the trades. So I won't get any more about that. If you're interested, talk to me privately, PM me. Okay. So yes, I do agree with that idea. If you are capable of doing that and you have the skills. Okay, no, David, don't be like Jeff. That's not your mission. Your mission is to be like you. I'm unique, you're unique. And it's important to understand that. Yeah, David, what I was referring to is I have a little card on my desk that I basically switch modes. So I may not be trading live, but I still will be practicing a setup or testing one. So I jump around between trading live, trading sim, doing drills, which I usually do live, and testing new setups, which I also do with live. But if I'm really not sure how they work at all, then I'll test them in a sim. So for me, what I do if let's say I have that, you know, and I understand where your question's coming from in the process, you know, if I get to here and, you know, it's the wrong field or, you know, 3 losers in a row or whatever you're doing. Yeah. What I'll do is I'll just switch to sim or sometimes I'll just get them walk away, come back, then switch to sim. And sometimes it's a matter of I just had the read wrong on the market, you know, when it opened and I had to lose some money and take a break before I realized that. So then I'll feel comfortable enough with that and I'll go back in live. So, so that's what that number 5 means. It's really about just checking myself when it just doesn't feel right. You know, one of the things you're going to all learn as a professional trader, that good trades just feel right. You'll get in there, you'll scalp, it'll be profitable. You'll get in your scalp, it'll be a loser, no big deal. Scalp, winner. You know, it'll just get to the point where it's just like that. I hope you get right. And when it's not doing that, you'll just know, God, this just doesn't feel right. It's just, I'm working too hard for a tick here and my trades are going wrong. Yeah, I'm getting out of them with a tick or two, but they're going wrong first and I'm on the wrong side here. That's where that's useful. Okay. Yeah, it is the unifying theory. That's a really good way to put it, Darren. I never thought of that, but that it is. And when we go through the step 2 stuff, I'll give some more examples of that. Hoping I didn't want to make this too long. I see we're at 10:15, More people are here than when we started, so I guess that's good. We'll just keep going. Call it 11 o'clock as our target to wrap up. All right, let me just get through the rest of the questions, then we'll continue. How long have I been using the Open 5? I used to call it the 2 and 2, and I've been using it since 1995 when I traded the pit contract via voice remote. And I used to call trades into a broker that had a floor, a local that executed the trades against my orders. So I've been doing it since then. I used to call it the 2 and 2 because it used to have a little different behavior. Because everyone wasn't so automated, it used to flush out faster. And the thing that I've noticed recently is that if we're going to have a really one-sided day, it still does that. That's that. You may have heard, some of the gurus saying, if the first couple of 30-second bars are all in one direction, there's a pretty good chance you can trade that for the open. And that's true. Although, you need better risk management than what I just said, but that's part of that. So, it kind of just gets going the right way. And so that, again, is part of my experience as a trader. So it's a bias of mine because I remember that and I remember that energy. But now when I see it, I recognize, I say, you know what? I don't have to wait 5 minutes to get long on that because I can just tell by the way they're lifting the ask that this is going to go. And I know you all know the kind of days you're talking about. One of you said to me that the Open 5 happened too fast for me to get in. Oh, exactly. That's what it's supposed to do. That's why it's and this is that first part of the Open 5, not the retest later, the B part. And again, there's an example of improving a process. I separated that. So back on that, yeah, if you see that kind of energy and you're confident in your abilities, hit the market, baby, buy it. Odds are it'll go with you. The problem is psychologically, that's just really hard to do because you're like, no, it just opened. It's too early. It's a head fake. Those are all things your brain's going to be telling you. And you get to the point where you just say, screw it. I'll jump in with a one lot. If it continues to work, I'll put on 5 more or whatever. That's that sense where your experience builds confidence and you just get to the point where you get it. And yes, that is very embedded in this page. And that's why, I really want you guys to understand that this is something you're going to be doing for a long time if you continue to be a trader. Yes, balance or proper imbalance is the key in all things, including trading, the order flow, life, losing weight, anything you want to put in. That is a true statement. I believe balance is key, and I also believe minimalism is key. I think our commercial consumerism is one of our huge weaknesses as a group. Okay, let's see. Yep, John, getting into a trade with the aim of not losing money. I know that's a hard one to wrap your brain around, isn't it? But if you think about it, if you have an edge that truly works, then that's all that should matter. I mean, it really did. It should be. So Blair just posted, is he here? Let's see. He said Sunday morning is church. I guess that's where he is right now. I'll make a joke. He can hear it when he comes and listens to the after. This is church, Blair. Right now, we're doing it. Okay. You shared. Okay, this is about that worksheet. If you guys could just PM me in the Slack or put it in the questions for Doc, please post that 150K worksheet, and maybe I'll even update it so it's current for you guys. Make a video and post. Make a video and post what? What are you referring to, David? How many hours do I prepare in the morning? Oh, Dave, I'm glad you asked that, because if you've been to my putting it together session, which if you look at the recordings, I am referring to this one, topic, putting together what we've learned so far in trading the open. I prep for about 5 minutes now. I used to do hours, and now all I do is look at these context charts. The ranges for each instrument like that, and the trend, if any, and if it's consolidating. That's literally all I do, because that's all I need. The structure of the previous day's market profiles here, their volume profiles, and the trend is all. That's the only prep. If you have more prep than that, you're creating bias for yourself. For example, the guys that spend a lot of time looking at levels. I used to do that. I used to spend a lot of time looking at levels and say, well, that's a level that might be interesting. That, that's a waste of time, and you're creating bias. Just understand places you might want to buy that would just be, oh, wow, I got nothing to lose down here. I might as well nibble along. Those, or vice versa, short. But yeah. Cannot find anywhere how to get rhythmic data. It's rhythmic. How to get rhythmic data. You just go to it's a provider. If just Google it, I'll deal with it. Bring it to me, David later. I'll show you where there. Do I do anything different when traveling? Ooh, that's also a good question. I used to have a real high-powered laptop, and when I traveled, I used to trade on that. And this is like 10 years ago. Now, if I travel short term, like if I'm going to go to Chicago overnight or London overnight or whatever. If I'm only going to be gone, a short period of time, I don't trade. I've just learned that without all of my tools, at a disadvantage, Amy. So, however, I'm nomadic also. So, a friend of mine has a really cool property up in the mountains not far from here. And once a year, I house sit for his dogs and his ranch. And he's got like tenants on the property, and it's a lot. This year and last year we had a fire and everything got closed down. But this year I traded doing that. But what I did was I kind of would stay up there in the evenings and afternoons, and then I came down and did the Open 5 at my existing setup. In the past, I have brought my setup with me when I go do that. So that's the answer to your question. That's why I've gotten it down to these 3 monitors of this size and this Cube server that I just bought that I showed you guys that's going to be my Ninja 8 day trader, et cetera, machine that I just built. I want to make it so that I have 4 boxes that'll fit in the back seat of the car, because that means I can take it pretty much anywhere I go, as long as there's a good high-speed connection and stable power. And then if I have a battery backup that goes to a big one. It's like 2,000. So, it'll run this thing for like a good half an hour if I needed to. That's important, because a lot of places that are out in the rural sticks have flaky power, like where I live here now is like that, even though we're not rural, but people here like to think we are. Anyway, okay, continuing questions. Yeah, the more you try to prepare, the more it gets in the way. I agree with that, Colin. And for years, again, the conventional wisdom is do your homework and, see all these guys posting their trade plan for Monday, November 25th. Nonsense, nonsense, nonsense. Again, not in the sense that that's not good. Nonsense in the sense that it's not mindful of reality now. Murphy's book that is a technical analysis Bible. You should know that stuff, but it's not an edge. It's not a tradable edge. And that stuff is more nonsense. The more you prepare, the more biased you're going to be. Our skill is reading the now. Reading the now within the context of the past. That's what we do well if we're good at this. That's what a good speculator does. You understand the now within the context of the past. So spending too much time on the context of the past will distort your ability to understand the now. That is a very true statement, Colin. Good observation. My journal, I'm getting to that. That's the end of this. The journal is a big piece of it. It's not the end, actually. It's just more... yeah, everybody should have at least one big power backup, regardless of where you are, even in the city, because power fluctuations can screw you up. Yeah, don't read Twitter for advice, but I pick on people there just to to be an anti-furu, and it attracts followers. It also attracts students sometimes. So a lot of you know me from there. So but Twitter, other than that, Twitter's it's a big echo chamber of stupidity, basically. I actually think the world would be better without Twitter. Certainly our political system would be. Wouldn't have to listen to the White House all day long. All right, what about using a virtual server? Yes, you can do it, but it has to be a very, very high-end one, and you have to be very skilled at managing virtual resources, Amy. But that is a great way to do it. I have friends that run multiple virtual servers on multiple parts of the planet, and then they trade from wherever they are, and all they do is bring a laptop, and that connects them into their virtual server. And yeah, a high-end laptop. And that's a perfectly viable strategy, particularly if you're a good dome trader. I could easily get by with a high-end laptop and just this one main screen. I don't need anything else. I really don't need the charts during the day. So, okay, the process takes care of the prep. Yes, that's to some extent true. Echo chamber for stupidity. Yeah, I can actually take credit for that too. I've heard some other great descriptions too, but I'll leave that one. Okay, yes, well, thank you, because I didn't speak nonsense. Yeah, I've worked hard not to speak nonsense. I just, and even the people there that they're, like we criticized John, I forget his last name, but the Bollinger Band guy, and You know what? I think his intentions are good, but again, it's Dunning-Kruger. He doesn't understand what he doesn't know. And that's a really important piece of the understanding yourself. If you're smart and you understand how smart you are, understand the liability that creates, that your ego is going to lead you to think that you're smarter than everybody else. That's a real good piece of self-analysis. Also understand, if you're not the brightest guy in the room, be honest with yourself. Just struggle through high school and you have 2 years of community college, and that was rough, then maybe you shouldn't be having arguments with the guys that are hardcore math freaks. It's a different game for you. For you, it's about street sense and understanding just trading. And, you want a good education. If you're not a college guy, go watch The Drug Dealers or watch the series The Wire, which is about drug dealing. And you'll totally understand street sense for business, and trading is the same way. So either of those 2 routes will work, but you have to know yourself. If you're not the brightest bulb, don't try to believe you are. Understand your own limitations. There's a great Clint Eastwood clip from Dirty Harry, or from the sequel to it, where he says, a man's got to understand his limitations. Nothing could be more true. Okay, I am going to go back to journaling and whatnot, but I want to do the second half of this real quick, because I think this is helpful again in creating your own, which is why I'm telling you about mine, not so you can duplicate it, but so to give you ideas for yours. Okay, so step 2, context. Let's talk about this for a minute. I basically got everything I need to understand about the context of the previous days down to 4 items. And that took me 18 years. The hardest of those 18 years was the last 4, where I really had to think about it. Remember that Steve Jobs quote, that it's really hard to get to simple. I think I put that in here. I put it somewhere. It's up in the Facebook page. Anyway, so just so you know what I'm talking about, this could not be more true. It's definitely something you need to remind yourself frequently. Okay, focus and simplicity. Simple is really hard, you guys, and that sounds totally contrary, but it's correct. Getting something this simple took me decades. Okay, so those 4 things are all I need to know about context. What are they? Number 1, is there a trend day brewing? What does that look like? Real easy. When you roll out of bed, you grab your coffee, you flip on your computer, and it says the Dow futures are up 300 points. Guess what? A trend day is brewing. Or conversely, the Dow futures are down 300 points. Guess what? A trend day is brewing. That is that. What does that mean? It just means, do we have a large move in one direction or another, and everything is going that way? We have correlation. All the indexes are going up or down together, and it's significant enough that the news services are commenting on it. The futures are gapping up on, Trump's trade tweet, or gapping down on China saying Trump's full of shit, or, whatever it is. Okay, so that context is important, because the exact opposite of that is a flip. And that's a setup we haven't talked about yet, but I've referred to it a lot. It basically is when you have an overnight that looks like a trend day, and then it opens, and the regular trading hours guys say, yeah, right. Up 300 points on that nonsense from Trump? Yeah, I'll believe it when it happens. And boom, we go right back down to parity, or even down some. And we've had a lot of days like that. So that is the most important thing, is what's going on overnight, and is there anything I can discern from that will help me with my setups? Well, clearly a trend day brewing is probably going to make a really strong open 5, because there's a lot of people that are trapped on the wrong side from the previous day, and blah, blah, blah. Or it could be a reversal, because it might flip over. It could be a reversal and a flip. It could do a flip at the end of the first hour and do it at the first hour high or low. Although that's unusual, but these all tend to happen in groups. So we'll come back to that. The only context we need to understand is, do we have that? Most days we don't. If there's just, it's up a little bit, it's down a little bit, then we're not going to get a flip, because we haven't had an overnight move, and that's a prerequisite for a flip. So that's all I want to know. Number 2, what's the profile structure? Again, that's very simple. I just grab a 5-minute. And so let's say this was today, except it was right here. Okay, we hadn't opened yet. Let's say it's right here. Okay, so it's I don't know, 5 o'clock in the morning, 4 o'clock, 4:30, let's right there. Okay. So what's going on? This is the NQ. Well, basically it is perfectly balanced, it's symmetrical, and it's going sideways. And from the close of the previous day, which was right there, it hasn't moved a heck of a lot. So nothing is happening. That's what that means. Conversely, sometimes it looks completely different. It looks like, let's see, let me find a good example. This may not be a good example in NQ this week. Now, let me get a different instrument. Hang on a second. So I can show you another sample of that. Hang on. Oil does that better. So oil is always a good one to look at. Okay, so yeah, that's a pretty good one right there. Okay, so here's an example where this is the overnight for oil, and it was active overnight in a good size range, and then it opened. This is its open right here, or the pit open would have been right there. That's why I don't separate those. It does that generally in the middle. And then they came in and they sold it. There was a tiny attempt to buy it that just got crushed. And again, for whatever reason, whether it was inventory or whatever. That's an example of a trend day. We were trending down. They attempted to buy it and it just blew up and kept going down. So, you know, if you looked at that from here overnight, it would have looked like that. The day opened up. You know, we had a real volatile open that tried to, you know, it went down, it got bought, they tried to take it up, and then it just got crushed. I mean, it just got totally sold down, see? So that's a really good example of that context and why that's so important and why I put it where I do in my process. So let's go back to that. Trend day brewing, I showed you what that looks like. Flip, you won't know that till afterward, and you always want to have it in your mind, but it can't happen unless a trend day is brewing. Really important to understand that, okay? There's a question. Let me see if this is perfect. Yeah, I'm going to just stop for a second. Amy's asking a good question here. Is your hardware setup part of your BUBA? Yeah, it is. Although to know what hardware you really need, you have to get further into your BUBA first. But in general, you should have the best hardware you can afford and the minimal number of screens. I used to tell people the most screens. That's pretty funny. I don't see any reason for having more than 3 screens now. And realistically, you can trade remotely from your motorhome with just the domes, because everything else you look at, like the context, you know, and this kind of stuff, you could have behind it and then just minimize them when you're not, you know, because you don't need them during the day. So, you know, you could maybe put your tick chart on the same screen if you wanted to. I don't see any reason why you can't use a real high-powered laptop. Your connectivity is your weak link, you know. Campgrounds often don't have good high-speed data, and I would not try to trade without good data and low latency, but that is a distraction. We won't go into that. We can talk more about that later. So is there a trend day brewing? If there is, either way, it's a potential flip. The profile structure, what's that look like? Again, it's really pretty simple. You know, what happened in the overnight, and then the second part of that is what are the previous days. NQ is a really good example. Consolidate, 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 attempt to go up, sold down, consolidate again. This is a real good pattern, because, you know, you'll see people call it a head and shoulders. I don't care. It's not, but who cares? That stuff doesn't matter to me. What matters to me is that we're consolidating. And when we consolidate, we tend to leave areas of consolidation aggressively, like we did going up and coming back down. So this bodes well for this week. We should have a good week. And that's what I mean here when I say profile structure, you know, whether it's you know, for the index or, you know, in oil, it would be a similar kind of a evaluation. I would just say, okay, what's been going on recently? And interestingly, oil isn't that different. It consolidated for a while, it broke down, tested a previous consolidation, came back up, not only blew through this one, but it's actually above there now, which is surprising. You know, oil got almost up to 59 again. So something's going on there. You know, there does seem to be some stealth oil demand. Maybe it's seasonal, maybe, you know, it's airlines or shipping or whatever. But it's worth keeping an eye on. So that's what that means. It's again, just, you know, what's the context of the recent ranges and how might that impact today? So that's what the profile structure is. Extreme boundary prices, I like that. I've mentioned that over and over again. You know, if this was today and, you know, we opened and started going way up, you know, I would be really interested in being short right here. Why? Well, why not? I mean, it's just a real low risk place. Doesn't mean I would jump on it. I'd look at the order flow, but same story. If we opened down, 100 points or 200 points and we tested this area, not because it's support, it's an inflection area where buyers or sellers might come in. So I look to those as extreme boundaries. I did that. If you go back and look at the FOMC video, I talked about it in that one. On FOMC day, I do that a lot because a lot of times it'll have a really radical move, and those are hard to trade. But if it gets to a price you already liked to nibble at, that maybe was a consolidation from previous times, that where other traders might think it's support, quote unquote, or resistance, quote unquote. And then last, I put this in red and yellow to remind me again that regardless of all this crap, order flow overrides everything else. So it doesn't matter what the flip, trend day, profile structure, none of this matters if order flow comes in strong. What's an example of why that's important? Let's say we have a trend day brewing, and we've had a overnight, we were up 300, and we open, and the opening 5 is really strong, and you're long, and then all of a sudden, just out of nowhere, there's just sellers coming in. That's an example of that. Guess what? Regardless of why that happened, you've got to get out of the way. Because it could be a tweet, it could be news, it could be the landscape changed, it could be a nuclear bomb, whatever it is, you don't have time to go even find out what it is. You just have to respect the fact that a significant change in order flow overrides everything you were thinking until that instant. And you have to, if it's in your favor, bless you, that happens every now and then, you're long, and all of a sudden it just goes, freak flash up for whatever reason. Count your blessings, take your profits when it subsides, and go have a beer that you got lucky, because that's what that was. If you're on the other side of that, get out of the trade. You're not smart enough to game it while it's happening. You can't think fast enough, trust me. I think as fast as anybody I know, and I don't think nearly fast enough to even start to do that. Okay, now again, I want to zip through these relatively quickly so you understand this entire step 2. We've talked a lot about this other stuff, so that's pretty much the end of me talking, and then we can have more questions and comments about it. So that's the context going into the day. Once the day starts, this is the only question that matters. Which way are we going, and how good a job are we doing going that way? That's the crux of order flow in one two-phrase sentence. Which way is the market going, or which way is it trying to go, and how good a job is it doing going that way? That's always that's your overriding filter for your trade. If the market's going up and you're thinking short, and a couple of you told me, well, I figured it had to stop going up at some place, so I started thinking short. Okay, that's really silly because you're just literally going counter trend and counter order flow for no reason other than you think you're smarter than the market. So if you ever say that, stop right there. You're on the wrong track. The market's going one way. If it's doing a good job of it, then you have to respect that. So that's why that's in red, and that's the most important point. Number 2, and again, notice how these aren't numbered like these, because they all go together. They aren't a sequence, and any one isn't more important than any other. Whereas this is actually a sequence, 1, 2, 3, 4, 5, in order, and they are in that sequence of importance. The risk management doesn't matter if I don't have a process. Risk management doesn't matter if I'm in pain. You get the idea. These all go together, and any one of them can pop up at any time. So they're not in order, and they are all equal. Delta price impact, very simple. What is the current delta, whether it's bar by bar, like this, or it's the cumulative delta that you're talking about, like this? That is really a question of time frame. The question's the same. Are people on the buy side of the tape or the sell side of the tape, and how is that impacting price? The delta by itself does not matter. I hear you guys say this all the time. Oh, the delta is, the cumulative delta is minus 50,000. It's really bearish. No, nonsense. Guess what? There's that word again. Nonsense. It's not bearish unless that negative delta is pulling the price down, in which case it means something. If it's not pulling the price down, then I would be really concerned that you're misreading it. Because if everybody is selling hard into something and it's not going down, why not? Who's buying? I mean, that just doesn't make sense, which gets you to this one. If you're not sure what's going on, or if there's consolidation, sit on your hands. Anytime you are not reading the tape properly, don't trade. I mean, how hard is that? Guess what? That's harder to do than it sounds. That's why it's here. And I put those two together for good reasons, because they kind of work the same. When markets are consolidating, you often will have no good read, like when it's doing this. This is consolidation. I mean, it actually looks like it's going sideways, although if you're watching this on the dome, it's literally not moving much. You know, it's moving a couple of ticks, a couple of points each way. And that on a dome is nothing, you know. So if you're watching the dome, that would literally be like the price going, you know, in a little range like this. So what does that mean? Well, that's the market's way of telling you that nobody's in control or everyone agrees. In any event, there's no opportunity, therefore no trade. Okay, sit on your hands. So delta, is it impacting price? Number two, collect info. We did the overnight, trading the overnight session. I gave a really good example of this. When the market first opens, we don't have much of a volume profile. We don't have the value area, et cetera, et cetera. So we don't have all this information about where the VWAP is and what the POC, we don't know any of that. So the more time you give it, the more information you will have. So again, I default intraday to collecting information. If I don't feel like I know what's going on, then I should watch and learn what's going on. Yeah, duh. Again, a lot of this seems like duh, but you know, reminding yourself of it repeatedly is the only way you make it a process. Is you just do it over and over again until you do it automatically. And so it's not duh. It's duh when you can do it in your sleep, when you can roll out of bed without your coffee and do all this and still make money. That's when it's duh. Until then, it's not duh. Okay, next one. Oh, shoot, didn't want to do that. Okay, this one is, again, really simple. If there are large gaps, and large gaps, ES more than 10, Dow more than 100, NQ more than 20, 30, you know, those are big gaps. Preferably even bigger. You know, the bigger a gap is, the more you need to respect that it gapped that big. You know, there's days we've had 70-point S&P gaps and 500-point Dow gaps. When you get that, you have to understand that gaps occur because there's an overwhelming amount of demand or supply that created the gap. And for you, again, to think that you're the smartest guy in the room and you automatically know to short the top of the gap, or that the gap's going to fill, you know, or these furus out on Twitter, well, we have a gap on a Monday, that's 72.5%. Guess what? Those statistics are correct. I have them too. I used to trade them, but guess what also? In this day and age of order flow, they're useless. They are nonsense. Good to know, no tradable advantage. So if you have that, or if you just have a lot of volatility, you know, there are times we get an open and the open 5 is just all over the place, you know, in a big range. I'm not talking about the little tight ones. That's, again, the market's way of telling you to sit on your hands, or at least slow it down, size down. So that's what small means. Size down, slow down, and wait. So anytime I get gaps, and again, where did this come from? It came from the fact that when there were big gaps and I tried to execute my setups, they didn't work. Thousands and thousands of real tests, not back testing, real tests with real money, losing money. That's how you learn. What do I mean by respect? I have to respect that. That means be mindful of it. Low latency, for those of you that know what that means, and you're looking at your connectivity for trading, it absolutely has to be below 20. Closer to 10 is better in milliseconds, your latency. If if you're at a campground with, satellite internet and the latency is 100, your trades are going to get to the exchange after the price moves. That's just the bottom line. That's what that is. Okay, so that is these items. Next one up, wait, ace, king, enter this now. What does that mean? All right. For those of you that play poker, we've talked about this briefly. This one is about poker. This one isn't. I combined them because they're the same thought. Wait for ace, king to a 7-card Texas Hold'em player. Ace, king is the best pocket hand you can have. It's even better than aces. Because you can get straight flushes and stuff like that. That 4 aces gets beat by. So again, if you're a semi-pro or pro level poker player, you know what I'm talking about. Yes, I do that too. I love it. Occasionally go to tournaments. I haven't had time recently, but so you're looking for good setups. That means there are open 5s and there are open 5s. There are times when the open 5 is an ace king. It goes out strong, it pulls back right to the high, and then the buyers come in again. It doesn't get better than that. Get long, okay? That's what I mean by that. And enter this now is, I mentioned this in the Slack. There's a good conversation, I believe, with Steve about that. And all I was saying there is your test of whether you should take profits or add to a trade often is just simply that question: would I enter this now? And if you just made 10 points and you're being FOMO-ish and thinking, God, I should let this trade develop, and the order flow starts to go against you, guess what? Don't be an idiot. The trade's a winner. Take profits. And the way that you teach yourself that is you say to yourself, okay, if I was looking at this setup now after that move that I just made money on and a pullback with order flow starting to go against that move, would I enter this trade here? Of course not. I'm not stupid. Okay, then why aren't you taking profits? It's that simple. Okay, improvise and adapt and overcome. This is one of my favorites. That's a military slogan from the Marines, and it basically means that you can't let anything stop you. You have to work the problem, if you've ever heard it put that way. And the best example of when and how to do this is when you have a losing day. And that goes back to periodic review, daily debriefing. When I have a losing day, the first thing I do, instead of punishing myself or feeling shitty, is I say, okay, what did I do wrong and how can I not do it next time? It's that simple. And a lot of times it's a matter of something being adjusted in my process. Like, let's see, what would an example of that be? All right, here's a really good example. When I trade overnight, if you were at the overnight session, or if you haven't, you should watch the recording. One of my rules is using less size, okay? And why is that? Because shock events, news events that happen overnight, because the volume's so much lower, will cause more radical moves. And if I have a lot of size on, that's more risk. Remember this one? Risk management over here. So what I do is I manage my risk by sizing down into the lower volume environment. That's a really good example. There are times before I had that where I didn't do that. I was able to scalp the range in oil with a 20 lot, and then I made the mistake of trying that with the midnight oil trade, and I lost $22,000 in one trade. It's like, okay, that didn't work. I mean, it's that simple. Yeah. Why didn't it work? Okay, then how can I adapt and overcome that the next time? It's that simple, although doing it is not nearly as simple as that. But you have to at least have the process before you can actually attack the problem. Work the problems. That's another way you could refer to that. You have to learn to work the problem. The problem is not that you lost money and not that you're feeling all emotional about that, or you can't figure out how to tell your wife, husband, girlfriend, boyfriend, that you just lost the rent money or whatever it is. That's not what it's about. What it's about is, okay, what did I do wrong? How can I adapt that so I don't do it wrong and overcome that error next time? That's what that is. And then this is a kind of relates to focus, distractions, and pain. But for me, this is really important. It's real easy, particularly if you're a little younger and your body's better, to sit at your computer for 8 hours straight trying to trade the day. And I don't recommend that. So the last piece of intraday for me, and really should be for all of you, at least some version of this, is, are you time of day productive? For example, the opening 5 is always productive. You get all kinds of setups. You get momentum, you get the open 5s, you get edges, sometimes you get ranges, you get reversals. Everything happens at the open. So, no matter what your style is or your setups, you pretty much can't lose trading the open. But, on the days that we're really range bound and I'm scalping the range, and I post sometimes, oh, I just made $1,200 in the last, 35 minutes or 65 minutes or whatever it is, doing that, scalping the range, or high Momo scalping the range. That's not productive in the middle of the afternoon, when everyone on Wall Street's at lunch and, it's 11 o'clock here in California. Unless there's something going on, it just isn't productive to try to do that then, because you don't have the energy in the trading to do it. So, so this is my way of just kind of checking that whatever I'm trying to do is productive for that time of the day. Trying to do, trying to do the open 5 in the middle of the night. That won't work because the market's not open. But there's better examples than that. But that's a crude one. Scalping generally works all the time. So that's the beauty of, being a good scalper. But I tend to also look at it as hourly wages. I know I can do it. I know I can make $500, $1,000, $2,000 an hour if I really focus. But I also know it's stupid to try to do that for 3 hours in a row. So again, that's another part of this. And the purpose of every single thing on this document is to keep me from making a mistake or to help me be better at executing my edge. Repeat that. The purpose of every single thing on here is to make me better at executing my edge or to keep me from making mistakes that I make, and everybody will. So that's the focus. And again, if you just pick one of these, tell me about collect info. I could tell you 1,000 stories about trades that I didn't collect info and I made a mistake and I lost money. And then going back over those trades, I realized that was the problem. So Now, how do you get that much insight into your trading? Well, you do journals and you do them relentlessly. I don't journal when I'm not developing setups because I don't need to anymore. But that doesn't mean I don't, listen to myself and I don't go back and check myself. It just means I don't exhaustively document it. However, when I'm working on setups or developing something new, I do exhaustively document. I've used a few different journaling programs. I've shared that with some of you in the past. We don't need to talk about it now. What is a good way to journal could be another topic. But one, hang on one second. Something is making a really weird sound. It might just be at my end. I'll answer questions in a minute. But I did answer that one, Sommer, in the middle of the session, but I'll do it again because it might not be clear. Okay, so right now, an example of this is I'm developing a new preamble. And for me, the preamble is kind of like a little mantra that I do right before I go in a trade. It's just like, and I've kind of programmed it into myself. So, let's say the market's trading and again, this is another anecdote about process. I'm telling you something I'm doing right now. Okay, so let's say we're trading live right now, and the market's going, and I'm watching the gold trade that we did in the overnight session. Okay, I've told you guys what is the most common mistake that I'm making in the gold trade. I'm putting on too much size on the range before I really have a good sense of the range, and I showed you a couple of examples of that, where the range might get violated and come back to the one I was working, but because I oversized it thinking I really had it nailed down, I had to stop out of that trade in the place where I probably would have been better adding to a small initial position that I had, or getting out of it and coming back into it once it reestablished. In any event, the point is that that particular setup, right before I did that, I do a little preamble. And what I realized with my gold setup is that the preamble I needed for evening was different than the one I need for during the day, because the setups have different characteristics. So what do I mean by a preamble? It's like a little mantra. And here's what I do. So the best, simplest example is momentum. So let's say we have a momentum trade. In other words, we're talking about this setup, and there's only one rule in this setup, is to get your order on, use a market order, and then the second it goes your way, which it should pretty quickly, you got to get a stop between your entry and the trade so that you're locking profits. Because momentum trades, by the definition of them, is they can continue to go the way you're fading, or they can go against you very fast. So your only objective is managing risk, and then occasionally you get lucky and you just catch a huge winner because you jumped in at the right spot and your stop protected you. Okay, so that mentality at the regular trading hours is very simple for me. There's not a lot of detail going on in my head when I take that trade. And I showed it to you in the overnight session, but it typically occurs when I see a sudden change in momentum. And then, I'll decide, am I going to try to go with that momentum or not? Am I going to fade it? So, first I see it. Second, I decide, am I going to fade it or go with it? And that's usually a question of how quick I saw it. If I'm seeing it as it's happening, I will often jump on it and go with it, because that's the right thing to do. But if it's already going, that's really fear of missing out. And so I really should probably wait and try to fade it, or at least, get a pullback if it does continue. Okay, so that's a really good example. During the day of the thought process for a momentum trade, I literally only want to get on the trade. Which way am I going to do it? And then the second I execute, I got to get a stop in. And I don't care about anything else. Nothing else matters at that moment. Okay. Different story completely when I'm putting on a range trade in gold that I might be putting on, adding to over the course of an hour, because it doesn't develop quickly. And we did one of these, it wasn't over an hour. I fast forwarded time to show you, but we did one. I think we got as many as 4 total, and we were adding one at a time, taking one off in a really tight little range, and we made, $200 or something, if I remember right. Okay, that's a good example of where the preamble for that is completely different. The preamble for that or the mantra for that. And this is something I'm doing right now because I realize that some of my overnight setups and some of my new setups have a different mental mantra. And this one is like this. Okay, number one, wake up, it's overnight. So I have to immediately put those filters on. I want to look at extremes or range extremes. I have to size down, and I have to be mindful that there could be news coming out of Asia or the Middle East or Europe, because those are all during overnight for me, for the US markets. So over here, my mantra's slightly bigger, slightly longer. It's still 10 seconds, but I say to myself, okay, what range am I working? It's range setup. I wouldn't be doing high momentum in the nighttime, but if I did, it would be the same as I would have done over there. But this particular one, okay, I'm saying to myself, is the range I'm working legitimate? So let's say I was working this range up here, which was kind of what it looked like in a double distribution the night we traded that. Down here, should I still be trading this? Yeah, maybe. So is the range still intact? Yes. Okay, so that's question number one. Question number two, if I'm thinking of buying here or selling up here or whatever, what's the guy on the other side of the trade thinking? Because if I'm going to build myself into a range trade, I have to be thinking that there's traders that are going to come in and buy after me or sell after me if I'm up here selling it. So I go through a little more of an involved thinking process than I do for that momentum, where it's just like, get in, get the stop, and then just let it rip. So overnights, I have to be more deliberate. A bunch of you have asked me about trading gold as your bubba, and if you're thinking that way, you have to learn to make your mantra more deliberate and more technical. So where does it fit in the technical picture? Because that matters more overnight than it does during the day, where the volume will just overwhelm the technical picture, and that's why we're less concerned with it. So that's an example of something I'm doing right now. I'm trying to work out two little simple mantras: an overnight one that covers all overnight, and an intraday one that covers all intraday. And I just gave you examples with intraday momentum and overnight with gold range. But the idea is to have one little, okay, it's overnight, less size, watch out for news, trade the extremes. And in the case of something like gold, I got to really be careful where I size. So it's not just less size, but it's where. It's that extreme question to a point, and then I have to punt and let it give me another range. And so I really have to think a little more before I do that. What's another example? Okay, the open 5, very cut and dry setup, particularly, as we've talked about the A part of it, at the open. An example like this day right here, this was Friday. Here was the opening 5. It came in. There was a really, indecisive, you get this little spinner here with huge wicks on it. So we can't really tell a lot looking at the 5-minute about how the open 5 started. We've got to really go back and do it here. So let's do that for a second again so you can see the example in a real example. Okay, that's what it did. It opened and it immediately took a dump. So your first reaction there obviously should have been thinking short, but then of course it bounced right back up and gave you the short of the day right there. And a couple of you commented on that. That was not only a short on the open 5, but it was an up thrust because the volume was a lower high on high volume, and then it just went against it really hard. So that was a really sweet setup that you could have entered really quick without thinking a lot about who's on the other side of the trade, because it really didn't matter. It was real more, am I on the right side of it? Yes. No, I'm not on the right side anymore, but now we're back up here again. Well, that worked before. Should it work again? Maybe, but a little slippage up here. Okay, now look at that. Real high volume, turned hard. Lots of buyers got caught in that move, and then they disappeared. So, your risk of putting a short on right there, 0. Really good open 5 fade. You also could have done it here. Lower risk trade because it truly tested the open 5, and then ride it back down. And again, down here, no, it's not, boy, is it going to break the low and I'll make even more money? It's take your damn profits and let the trade reset. Okay, so that's an example of how, a mantra might be useful for the kind of things that I do. And so I'm trying to kind of work that out to just some, 3 sentences I can say to myself real quickly right before either an overnight or a daytime trade. The daytime one is really pretty easy. It's the overnight one that's a little more complicated. And that's why I'm working on it. Okay, now I'm going to take questions and comments, and the rest of this, step 3 is all about the setups, and that's the whole workshop. So we really don't need to spend time over here. we really are talking about how you build the first part of this, because the setups, you'll use whatever ones you like and you'll find others, and this will be not even more uniquely you, and over time these will come and go. But this part here, this block of humble, competent, context, that never, or how you kind of cycle around, that shouldn't change much. Yeah, I add and take away from these items, but the structure of it has not changed in a long time. Okay, let's see. I'm just going through questions and then we'll have more comments. Okay, hardware setup. Yeah, I comment on that. The latency, I answered that. Cool, I'm glad it's helpful, Amy. That's why we're here. And that's why I pushed this session so hard, because so many of you were like, God, I just need to learn 2 setups and then I'm going to go do a combine and get rich. Yeah, there's that voice again. Okay. Yeah, latency should be under 20. Yeah, South Africa, I don't know your infrastructure too well, but no, you don't need a cloud server if it's 100. But I would scrutinize your executions a lot. To scalp, that could be difficult. Why is it like that all over South Africa? Really? That's interesting. All right, MJ, you and I can talk more about that in the group. Throw it in the questions for Doc or anything goes, and we'll all talk about it there. Okay, what do I mean by respect? I'm still not sure what you're asking me there, David. Cool, I see an aha moment from Sam, wonderful. Okay, a delta price impact, Sommer. Okay, that's really simple. There's times when the delta is changing, or, here's a really good example. Price is going down, delta is on the downside, and the cumulative delta was going down. So this is all in sync. But let's say we saw this kind of behavior, but price was going up. That doesn't compute because it's getting sold. The trades are going by on the sell side, but it is going up. So that tells you either somebody's accumulating or whatever. The data is not making sense, so that's what this means. It means if the delta and the price impact of the delta are not the same, then something's wrong and you need to step back and understand what's going on. For example, a strong downward move should always have a big chunk of selling delta on it. I mean, if it doesn't, then why did it go down? What happened? It doesn't make sense. Likewise, a move up like this one here off of the open 5 low, that was a classic on the Friday on the ES. Look at what happened to the cumulative delta. The price and the delta impact were exactly the same thing, and that's what you expect to see. There are times when you don't see that, and that doesn't make sense, and therefore you need to take a step back. So that's why it's a very important thing, particularly at the open, because often they're not lined up at the open. So you kind of have to wait and see, which side's going to win. If they're selling it and price is going up, ultimately that will come back, together. It's not a gameable edge, but, you can't continue to see selling into an upward move. So something has to give, and, you don't want to try to predict what it is, or even that you're reading it right. Sometimes the data is just not making sense, and there's a lot of reasons that can happen that don't necessarily mean anything other than they don't make sense. And I've learned to just, when that happens, step back. It's just a good instinct. If it doesn't make sense, step back. Okay, daily self-analysis. Yeah, what is this right here? A lot of that is my competent, but before I had lots of pain issues and whatnot, that was really more about just getting myself in a mindset of a trader, the trader not lizard brain thing. So I've really expanded more on that in my competency. And mental rehearsal, as an athlete, this was something I always did. I ran sprints in high school and college and track, and, I always used to mentally run a race 1,000 times before I actually ran the race, on the track. And that's mental rehearsal. And so a lot of times, what would I do before a race? I'd warm up, I'd stretch. Daily self-analysis like that. I'll get up, I'll have a cup of coffee, I'll say, okay, sleep okay? Do I feel okay? Have I been exercising? Is my brain working? How did I feel yesterday? It's that kind of stuff. Okay. Oh yeah, lizard brain, Darren, is going to come up forever. We're human. None of you is going to be a Vulcan. You're not going to be able to be logical all the time. I don't care how mechanical you think you are, Sommer. Okay. Yeah, I know you want that next setup. Chomping at the bit for springs and up thrust. You know, all you need to do to learn springs and up thrust is look at any chart. They are everywhere. I mean, I just showed you one a minute ago, but that's the beauty of that setup. And if you read any of Weiss's stuff, Trade's About to Happen. I mean, literally take any 5-minute chart and I guarantee you'll see at least 3 springs and up thrusts if you look at a few days. So we're not going to teach that setup, but I'll show you how that's true. Here's an example right here. This is the overnight of ES. There's a spring for whatever reason on that gap down, and then the up thrust, up thrust, up thrust into a great short. So there's one. Let's see if we can find it. Here's a spring right here. Consolidation. This candle took that out and came back and tested it. That point right there where my mouse is was the spring entry. And then blows through the last high on exceedingly high volume, double what it was before. And this is exactly what you'll see in the book, Weiss's book, Trade's About to Happen. And that's why he says, and I agree with him, with just a 5-minute chart and the volume of the swings, you could trade for a living doing nothing but trading springs. So, if you don't like order flow, you could literally do that if you learn to read that setup, because it occurs everywhere. So yeah, we'll do that one soon. But the problem that people do, Sommer, and this is the last thing I'll say about it, with springs and up thrusts or anything Wyckofian, is they try to go too deep into it. Wyckoff's theory is thousands of pages long, and if you really get into all the phases of a Wyckoff cycle, I don't use any of that. The only Wyckoff I use are springs and up thrusts. I use nothing else from him because nothing else is necessary. That is gold all by itself. And that's an example of that concept of, find one nugget from everything that you study. And that was mine from Weiss, was springs and up thrusts. I mean, I just couldn't believe it. Every time I saw them, they worked. I mean, over and over and over and over. And it's just like, my God, I mean, this is too easy. So if you just want to trade off a chart or trade stocks, springs and up thrusts work great in stocks too. So anyway, okay. Yes, elaborate. Right food, yes. I don't believe in any kind of a diet, but I am a faster. Not this kind of trendy intermittent fasting. I've fasted my whole life. It's one of the ways I control pain, and I'll go for long periods of time. I will fast for 2 or 3 days at a time, and it really helps me focus when I'm coding. When I'm trading, I find having some protein in me is a good idea because it keeps my brain working. Certain stimulants are useful, like caffeine and theobromine, which is in coffee or is in cocoa. But those are all elements of that, and that's really individual, Trader PD. But you got to get it tuned for you. Vegetables, fiber. If you're a junk food junkie, you're gonna have trouble succeeding trading. My vice for trading used to be Diet Coke. Back in the day, I used to drink a ton of Diet Coke. So let's see. Next question. Yes, I did say that. Any person could trade for a living just using springs and up thrusts. Could they do it with the range setup? They could, but the range setup involves skills of other setups. To do the range well, you got to be good at reading edges and ledges, and you've got to be good at reading order flow. Being a range trader is not possible without skills at reading order flow. Whereas you could trade up thrusts and springs without being a rock solid order flow trader, because you just need to be able to understand zigzag volume, because that's really what it's about. We'll talk about it when we get to that setup. Can you see swing volumes on the dome? Yeah, you can. There are different types of dome templates that will show swing volumes. I've seen some people do that in Sierra Chart and multi-charts. There's a form of it in XTrader, which is the TT platform. ADL can do that. That's one of the ADL functions. That's that algorithm design language in TT. So yes, bar, it'll even build you little swing volume charts right on the TT dome. But again, that's first learn the price action. That's Bubba implementation. Maybe that's your 2021 objective. Spring and up thrusts are doable with a chart. Absolutely, Philippe. What I'm saying here is completely true. You do not need to know anything about order flow other than just the most rudimentary ideas of, bar by bar and, total volume. But the upthrust and spring setups are really just about cyclical, zigzag volume behavior. That's really all they're about. I mean, think about it. Here, let's take this from 5 minutes and let's make this 1 minute. And I'll show you. Let's see. I will give every one of you in this workshop, all 30 of you, $100 if on a 1 minute chart I can't find 5 springs or upthrusts. So that is we're going to do that right now. Okay, every one of you gets $100 if I can't find 5 instances. Okay, 1 right there. Okay, high volume doesn't make a higher high, reverses hard. Upthrust, there's 1. Number 2, there's another one right there. Number 3, number 4. All right, that was too easy. They're all in one spot. Let's find some others. So I got 4 of them already. Okay, here's a spring right here. Here's another one. So you have this consolidation low. Okay, and look at the volume, 800 on the downside, then lower, and a slightly higher low. Then again, a higher low with double that volume and half of this. So we've already made up most of that. And then look at what happened. So your entry, if this was your setup, would have been anywhere in here on this candle. And this is the problem with candles. That's a 1 minute candle and the whole trade went by on that candle. So somewhere in there on your tick chart or whatever, you would have got long. For me, it would have been like right when it went past this level here. And you could have ridden that all the way up there and then you would have jumped out. So that's a spring right there. That's number 4. And here's an upthrust right here. So that's a legitimate breakout because it took these out. Then it reversed. And then that one, that one, that one, that one, or that one are all upthrusts. Basically, on each one of those candles or those bars, it tried to take this out. It failed. Obviously, the volume wasn't even measurable here. And then we went down on double that move up in volume. So that was a clear. You could have entered in any of these. You could have entered here. You could have entered here. You could have entered here. I mean, this was just upthrust city. All right, so there's 8 examples. Y'all lost $100. All right. Next question. Okay, you're welcome, Philippe. I mean, the idea here is to, the idea of the whole workshop is for you guys to stop thinking of all the furu bullshit you've been taught for however long, 1 year, 5 year, 10 years, and just realize there's significant opportunities in the market if you just get your head out of your ass. I mean, I say that with respect. Just stop thinking about all the crap you think you know and just listen. You can make a living next week if you can listen well. I mean, everything I'm showing you, go back to when I talked about setups at the very beginning. That was the session here. And if you don't remember it, go back and watch it again. The very first one, when the introduction, and I put that slide up about what makes good setups and whatnot. And these are all examples of it. They happen over and over. That's one of them. And what they do when they happen over and over is always the same. Open fives always do the same stuff, more or less. And, springs always do the same thing. And upthrusts always do the same things. That's what you're looking for. And then your Bubba is which of those fit you at which times of the day, with which instruments, given your limitations and your environment and your 3-year-old and your 9 spinal fractures and whatever your world is. That's the crux, and that's kind of a great way to summarize all this in 2 hours and 15 minutes. Midnight session. Okay, do I use the 4 types of profiles? No, Trader PD, I don't use any of that from Market Profile. I know it. I studied Stedelmayer extensively. There's no question you could ask me about TPOs or about Market Profile or about any of the market. And when I say the Market Profile, I mean the trademark thing that the CBOT owns that was licensed from Dr. Stedelmayer at the University of Chicago. All right, that's what I'm talking about. And all of those things you mentioned, the types of profiles, double Ds, Ps, all that comes from that. And you know what I'm going to say? What's the next sentence I'm going to say? What do you think it is? What's the next word I'm going to say? Bingo, it's nonsense. It's not nonsense because the theory's wrong. The theory's right. But shit like, oh, well, a P profile will do blah, blah, blah. That's nonsense. Yes, P profiles have certain characteristics, but what you need to do is you need to extract that, build it into your setups, and then it becomes an edge as a component of your setup. In and of itself, these statistical things you hear from, bless his heart, what's his name, the expert in this space. I'll see him on Twitter. And the guy is a respected, successful trader. God, you know, I don't follow him, but I see. Can anybody give me a name in the Dalton? Dalton, that's what I'm thinking of. Dalton. Okay, Dalton is the guru in the profile space, and so is Trader. What is it? Trader Mohan. Morad, what is it? Trader 87 or whatever his number is. Morad Asghar is his real name. He's another good example. These guys are really hardcore about the shapes of profiles. And you know what? Great. If that works for them and if they've developed tradable edges, I don't find that those things are tradable edges. I think they're components of one, and that's how I would use them, Trader PD. In any other way, I think they're misleading, like most technical analysis. They make you think that a certain thing, because it has statistical bias, will happen. And it won't. It just has those odds of happening. And that's where the Daltons and the Morads and all those guys, because they're so emphatic and they're selling, books and education and all that, sometimes people don't read between the lines and understand that. And they'll be the first to agree with me. I'm not criticizing them, and they wouldn't disagree with this point. But those things in and of themselves are not edges, and a lot of people mistake them and believe they are. There are edges there, but you have to mine them. That's a really good word, mine them. Am I coming to Vienna soon? God, I'd love to come to Vienna. I'm actually, my family is Austrian and Hungarian. From the old, both of my relatives came here before World War I. Right before it, they were fleeing the Tsar problems and all that in Russia and Hungary and Austria. And so I'd love to come. Will I? I don't know. We'll see. But I'll definitely look you up if I'm in your neighborhood. Yes, FT71, that's what I'm talking about. Morad is his name. James Dalton, yes. Again, these are really talented guys, but unless you really dig into their material and ask them, they will tell you the thing I'm talking. These are not edges, those are components of an edge. Okay, yes, Austria and Ukraine. I definitely have some Ukraine too, depending on where you look in the family tree. My name, M-A-Y-E-M, is unique. I am the only male on the planet with that name, and I am an only child of my father, and I do not have any kids, let alone male kids. So this name will die with me, but it actually, there's a lake in Goa that is named that, and it translates loosely to this, to water from a good well. That is my story, because one of my great-great-great-great-grandfathers was found in a flood, and they did not know who his parents were. They knew he was from a certain village, but they did not know. So he was named Mayam, or Mayam, which is a good thing which comes from the water, or water from a good well. In Hebrew, it's a slightly different word, but it means the same thing. Okay, let's go back and recap, and then I'll see if there's anywhere else for this session to go that we haven't gone already. We'll wrap up. Okay, so oops, go to the calendar. Okay, so this is about building your process, creating, adapt, improvise, and overcome. I gave a couple examples of that for me right now. Open 5A and B, doing the mantras. Importance of art and fun. I haven't gotten to that yet. I'm going to in a minute. I talked about delusions. There's a lot of those, but those of you that have them, I will call you out on them, and I think you know who you are most of the time. Importance of art and fun. It's really important to have fun trading, and one way that I implemented this into my process was in earlier iterations of some of the pieces of it. Let me see if I can find something like that. This is a good example of something I was testing with line break charts, which are a really cool style of chart. That's what these are here. This is a whole nother set of testing with a completely different structure of tools for another idea I had. And I ended up using Renko's and range charts instead. But I used this successfully for 3 years, these line break approach. Anyway, let's see. Yeah, I don't see a really good example of that, so I can't give you an example of what I mean. But anyway, it's really important to have fun, and it's really important to understand that trading is an art. And And finding your Bubba and developing a good process requires both of those things. Look, trust me on this. And I'm going to tell you this from experience. If you are having trouble trading, but you're still making money, that won't be fun. It will be hard and it will be frustrating. And at the end of the day, you'll be stressed and your back will hurt. If you endeavor to be a trader for a living, that's not what you want. So if you're doing that and you're doing it and making money, then you're at a really good point to consider this thing that I'm talking about with art and fun. On the other hand, if you're the guy that can't find a Bubba yet, you're not here yet. So you don't need to worry about this one right now. But as soon as you start developing a profitable methodology, this becomes really important. So I mean, as soon as you have your first working setup, you know, for example, those of you doing the tick drill and successfully doing it at all, you know, you're learning from it. That's the definition of success. Then you're probably at the stage where you're starting to understand why fun is important, and fun and making money are not the same thing. Making money is actually boring. Fun is like, you know, when I develop a new setup strategy for gold with that range, for example, and it starts working, and then I get to the point where, you know, I can wake up, oh, you know, my back hurts. I roll out of bed at 1 a.m. and, you know, I'm just going to stay up for a few hours because it's too painful to sleep, and turn on my monitor and oh, wow, gold's in that range. Boom. And I put on a trade and I don't even think about it. And I go get a cup of coffee and I come back and it's working, and I put on another one to add to it. That's what it's like. That's what it's like when it feels right. And that's fun because you just realize that, that you know enough, and you realize your confidence is sufficient, that as long as you're following your process, that in the long run, you know, the long game, that you will make money and you will succeed at this. And that how much money you will make will be a function of how much you trade. And the more you trade, the more money you'll make, and you can scale that infinitely. But until you manage this process part of your trading, what's going to happen is every time you have a loser or a bad day, you're going to get overwhelmed and you're going to break your process. And until you develop a way to not do that, like this one here for me, and to just roll right back in after a bad day or a bad trade, that's when it'll start being fun. And that's when you'll start to develop your own art. Like, for example, you know, there's a lot of things I don't share in this group, but I'll share one example of that. I know a lot about ADL and XTrader, the TT platform, because I am working on algorithms and automatic trading setups. I do it all the time. You hear me criticize it too. Yeah, because it's not a way to just leave your computer on and make money like a lot of idiots think. What it is it's a way to manage and automate specific strategies. Can you automate the open five? With the right tools, yeah, you probably could. The right tools is the big question, though. They don't really exist right now, but the closest thing is ADL. So if that's kind of your mission, and yes, that is what I do, that's my next step, obviously, of my development, not to not be discretionary, but to build more and more automated tools for my discretionary setups. And so that's something that I'm working on, and that addresses a way to do that mechanically. But you don't want to start there. You know, that's kind of like, you know, that's part of painting your masterpiece. And that's really fun. You know, for me, I'm a systems designer and a coder. So that, you know, that kind of elegance in a platform that can let me express my trading ideas really is cool. So Sommer, you know, when you ask the kind of things you do, I get it. But that's why I keep saying, you know, you got to be a blank slate. You got to forget all you know. Because to get to the level of competency where you can actually build algorithms like that, all the rest of the stuff's got to be done. You got to be an expert at everything else before that's even on your radar. Is everybody listening? You're not going to walk out of this workshop and go build algorithms. You don't know enough. You don't know what you're looking for. You know, when you're the level of Lee and you've been trading for a while and you understand coding and you understand the data feed coming from the CME and what it actually has in it, and you understand the difference between consolidated trades and the reconstructed tape in Jigsaw. I mean, this is really hardcore tick by tick stuff I'm talking about. Then you're qualified to maybe go build algorithms that would automate your strategies. But not like these yo-yos on the top step, you know, yeah, I just built this in TradingView and, you know, I'm up 73% and I do one trade a day. I mean, I have to check myself to not rip those guys up. I mean, Eddie, you know, he's one of the moderators, one of the top stuff people, Eddie Horn. He's even asked me once or twice, stop picking on these guys. Stop telling them they're wasting your time, you know, please, because they're just new, you know. And yeah, okay, I get that. But they're fucking idiots because they just don't know how much they don't know. They think they're so fucking smart. And that's the message with this last part. None of us are, me included. I'm smarter than most people. So, you know, big ego. I'm the first person to tell you that. But you know what? My record proves it. So, you know, I'll put my record up against anybody's. But at the same time, I'm also smart enough to know that I'm not smart enough to be that smart. You know, it's about how humble I can be and how much I can check my own smartness. So, you know, if you're one of the guys in the room thinking, you know, I'm pretty good at this systems design stuff. Yeah, okay. Are you at my level? Bring it. You know, that's what I mean when I say that. Bring it. Bring me your best. I'll help you make it better. That's what I'm here for. What I'm not here for is to help fulfill your fantasies that you're going to build an automated trading system and then go live in Aruba. It's not going to happen. Okay. Cool. All right. I see all kinds of good comments. I don't see any more questions. Thank you, Colin. I appreciate that. We've gone pretty long here. This is 2.5 hours. If there's anybody with a burning desire question, I will answer it, but otherwise we're going to wrap up right here. Thank you, Dr. Shaw. Thank you. All right. I don't see any other questions. Great. I appreciate it. I'm glad you guys thought it was a good session. I was worried you might miss my point, but I don't think you did. Okay, guys. I'll talk to y'all later. I'll put the recording up as soon as it's ready. It takes about an hour. Have a good Sunday. When you get back from church there, who was I picking on? That was the guy who owns a gym. I forget who I was talking about. Anyway, when he gets back, he can watch. All right, guys. Have a good one.